Our guest this week is Tyler Norwood, managing partner for Antler in the US. Antler is the world's most active seed investor, backing founders at the inception stage from all over. We talked about the impact of vibe coding, the traits that Tyler sees in Antler's most successful founders, why timing matters, and the value of surrounding yourself with other builders. I really enjoyed this one and hope you do as well. On that note, if you're new to the show, we'd love it if you'd follow along to future episodes by subscribing. And if you're one of our growing list of regulars, we'd be super appreciative if you give us a 5-star rating on your favorite platform. Shameless requests, I know, but it helps to grow the show, bring on even more great guests like Tyler. And with that, let's start the show. Tyler, thanks for coming on the show.
Of course. Thanks for having me, Joe. I really appreciate it. And yeah, I've been excited to do this. We've had some good conversations before, so I'm pumped to dive in and talk about all things venture.
For sure. I don't normally ask guests to do origin stories because while they're fun with Wolverine and Magneto, they're not as usually as interesting with normal people. But I feel like Antler is a really interesting case because it's the most active seed investor in the world and yet flies under the radar with a lot of investors. I'd say not founders, but investors. So I thought maybe we could start with you kind of introducing Antler to folks who aren't familiar with the firm and maybe the firm's background.
Sure. Yeah. So personal context, I mean, I've been here since the beginning. So there was, 5 or 6 of us that started the firm originally back in 2018 in Singapore. The short story behind Singapore was kind of 2 reasons. One is Magnus and myself had a reputation in Singapore. So we had been rocket internet guys. A lot of the companies that we had worked on were in Southeast Asia. We had lived in Singapore and worked there before. So we had a strong network, and it was an easy place to start a new firm. And then secondly, the Singaporean government was like very friendly to us, I would say on 2 accounts. So one, they built the sandbox in MAS framework for us to build a financial institution from scratch. And 2, they were very friendly from an immigration perspective. So I would say of the first 50 people Antler hired, there's probably 30 nationalities. And Singapore was a very easy place for us to like bring in tons and tons of international people, which unfortunately is very difficult for an early stage company like in the United States, for example. So a lot of people ask like, why Singapore? It's really those 2 main reasons. We knew we were going to be global from day one, so it didn't really matter where we started it. We just needed a place that, had as much leverage as we could possibly produce as an early firm. And so we started it there. We started the first fund in Singapore. We started working on global expansion very quickly. I moved to the US in 2019 to lead our rollout into the US market. So I sort of wrote the memo on why we should be in the US market, what the opportunity is for us, where we kind of fit in. I was right about a lot of things. I was wrong about a lot of things. And we've evolved and really found our identity here in the US over the last 4.5 years. But to talk about the thesis and sort of the soul of Antler, I think the easiest way to explain it is like we built the venture capital firm that we wanted as founders. We had built companies previously, and we had seen a ton of friends go and leave Rocket Internet and build their own companies. And we saw this recurring theme happening over and over again, which is early stage capital is really hard to find. It's very rare. It's not institutionalized. And when I say early stage capital, I mean like actually inception dollars, meaning like, hey, Joe, I think you're awesome. I'm going to give you money to like really go and explore what it is that you want to build and build your team and talk to customers and like figure out what's going to go into your pitch deck. That is a huge gap in the funding market. And I'll come back to why I think that's important for like what founders work on, et cetera. But the question we asked ourselves, and you would say that like friends and family is what fills that gap. And the predicate to friends and family is like, in order to invest into startups at inception stage, you have to know the founder. Like that's the only thing you can possibly underwrite. And so friends and family makes a lot of sense because it's like, hey, Joe, I've known you for a long time. I'm underwriting your personal trajectory and potential. And so I'm perfectly comfortable investing before you can like fully articulate what it is you're building. And so the question we asked is like, okay, well, how would you build that same conviction for people that you don't necessarily know? Like, how do you actually scale that up? And the answer to that question is really the main driver that informs like the residency product and the way that we work with founders. And so a lot of people sort of call us an accelerator incubator. I don't think We're an accelerator incubator. Most of the teams you work with, there is nothing to accelerate. It's not like, hey, you know what you're working on, and now we're going to give you like all the playbooks on how to like rapidly grow and get really good at fundraising, et cetera. It's much more like you want to build a company and you're like really at day -1, right? You're going through the process of exploring what you want to build, building your team, like fitting all these puzzle pieces together. They're nonlinear and impact each other, which is kind of a complicated equation to solve. Um, and so the residency product is, I think, accomplishes a few things for founders and a few things for us as an investor. For founders, number one is being around other people who are in that same phase of building, I think massively increases your chances of success. Like building a startup is incredibly difficult in its own accord. Doing it while also being in social isolation makes it like arbitrarily hard. And there are no good institutions to like go and be in a room with a bunch of people who are at this inception stage all at the same time. Like WeWork doesn't fill that gap. We all know it's just a bunch of aquarium offices. There's not really community inside of the WeWork. Universities don't really fill this gap. Like venture capital firms traditionally don't fill this gap in terms of like, hey, it's a room full of people building. And so the first tenet of our thesis is create community for people at inception stage. And that's the first thing that our residency does. We bring founders in groups. It creates this all boats rise with the tide sense of community of like, you're all trying to build really cool things. I think it accelerates like network connectivity of like in the beginning of building a startup, you need to be meeting a lot of people, and like being in a room full of other founders with really diverse backgrounds, like speeds that up a lot. And then there's just the social aspect of like, we're human beings, like we're social creatures. And so being in a room with people who are also trying to accomplish something really difficult, I think increases everyone's chance for success. The second tenet for founders is by getting to spend, like in the US, we spend roughly 6 weeks with founders before we choose to invest. I really truly believe we are capable of making much higher conviction, much earlier investment decisions into founders than traditional venture capital, because we don't need a pitch deck. Like you don't need all the answers to the questions that you would traditionally need to like apply to an accelerator or go out and raise a seed round. And I think that actually helps us fill that gap of that first $500,000 to fund yourself to really go and answer all those questions. And then for us as an investor, it is our underwriting methodology. So it's like, in order for us to invest at inception, we really just want to get to know the founders and see how they work, how they think, like build a human relationship with them, and then make a high conviction decision. And then for our LPs, it's like most LPs have very little exposure to actual early stage venture in the true sense of like, hey, we're taking really high risk bets on things that could be massive if they win, but have a very low chance of success. And so we've had a tremendous amount of success with our LPs, like giving them exposure to that asset class. So when you combine all that together, I think I would say, admittedly, what we've continued to work on and grapple with is like, how do you communicate this very concisely to the market, right? Like all of that context is really hard to put into like a tagline, right? And have people very quickly understand who we are. And so what we've been focused on doing is really just building our reputation through action, like building our reputation through what our portfolio companies say about us and how they articulate like how great it was to go to the Antler residency and to receive funding from Antler and be an Antler portfolio company. And here in the US, which is what I'm mostly focused on, but I would say globally as well, that has worked very well for us. And the compounding reputation that we've built through doing, not saying, is starting to like pay dividends. In the locations that we're in, New York, Austin, but also sort of across the country, right? We have founders coming from all over the country coming in to work with us. And so that is kind of the inception story of like why we started Antler, the intention behind the residency, which I think a lot of people conflate with like, oh, it's just an accelerator, which I really don't think it is. And then the sort of global nature from day one is like, we wanted to bring the ability to start a company and build a company being a viable career choice for anybody in the world, regardless of where they grow up and what access they have. And that's what informs kind of the global footprint. So since 2018, we've opened 27 offices around the world. I mean, we have a very impressive footprint. We're creating access to be an entrepreneur to people on every continent. The global network is also very valuable for our portfolio companies, et cetera. And then the sort of soul and intention behind what we do at the residency is, those core pillars.
What are the cities where you have the strongest sense of gravity?
Um, yeah, it's a good question. I mean, my answer is biased because I'm here in, I focus mostly on our US presence. So New York and Austin. We're working on opening up our office in San Francisco, which we can talk about. We've very intentionally gone to the Bay Area last in the US. So I would say that in, Austin and New York, I have a very strong anecdotal sense of the reputation that we're building here, particularly in Austin, which is um, an up and coming ecosystem. I would say the slope of its up and comingness is much steeper than people from the outside appreciate. And I'm very, very long on Austin. I'm very proud of what we built here. I think we're building a really strong reputation in New York as well, which is less up and coming, but still really trying to figure out its identity as a true venture ecosystem in all of the industries that are present in New York City. Um, Southeast Asia, we have a very strong presence. I mean, that's our oldest fund. And I mean, that's a market where you're talking about like literally zero pre-seed investors. And so, I think we've become number one, not just by default, but also because we're backing great companies in Southeast Asia that are growing and raising capital and, um, creating a lot of success in that ecosystem and introducing the dandelion effect of successful startups into Southeast Asia. Um, but our presence in the Nordics, right? Like we're an investor in Lovable, which is like outside of the Nordics, I would say globally, like one of the hottest companies going right now that everybody's talking about. We were a very early investor into that company, Central Europe. I would say that my perspective is we're building a very strong reputation in the US, but I actually think we're building a really strong reputation in all of the markets that we're in. And being on ground in those markets is one of the reasons why we're not like Hail Marrying checks into ecosystems from the United States. Like we actually have partners who are in that ecosystem and care about that ecosystem and understand that ecosystem.
San Francisco is obviously the Death Star of venture. It's enormous.
Yeah.
Going there last is a very deliberate choice. What was the path to doing that?
Yeah, like the process or like the thinking behind it.
The
Or
thinking
both.
behind it.
Yeah. So I think there's like two components to it. Number one was it is the Death Star. It is the big leagues. Like it is the pinnacle of the industry. Um, I think it's a sense of respect and reverence for like what's been done in that ecosystem before, and like us wanting to really understand who we are and feel very confident that we're very good at what we do before we like step into that arena. And I feel like we've gotten there over the last 4 years in the US and the other markets that we're in. And I feel like we have a product and we have experience and skill set and an understanding of what it takes to build a really successful company enough to step in and be able to honestly say we think we can add value to this ecosystem. Um, the second piece is the culture that we're trying to build around Antler. I don't think we would have been able to build that unique culture about how we hold ourselves accountable to the experience we're creating for founders, how we think about investing, how we think about expanding the sort of traditional pattern recognition of what gets funded and what doesn't get funded, et cetera. I don't think we would have been able to develop that if we started in the Bay Area because we would have just been so overcome with the culture there. And it would have been too hard to like build from first principles. Like, what do we actually believe in as investors? And I think we were able to do that by starting in New York and Austin, where there wasn't as strong of an embedded VC culture. And so we had a little bit more like breathing room to like really build our conviction about who we are and what we believe in and how we operate from first
Yeah.
principles. So the
So if you'd
combination of
started,
those two
if you'd
things.
started there, you may have turned out to be a wannabe YC. Essentially just
Yeah.
trying to copycat what you've seen work rather than build your own thing and get your own voice.
Yeah. Yeah, exactly. Right. Because I have so much respect for YC, and I think objectively YC deserves a lot of respect, and all the other early stage investors and all the incredible angels and all the seed funds. They're like, it's not that I disagree with their strategies. It's like because of their success, it would have been so hard for us to develop from first principles what we believe in, because you would have been like constantly looking at like, well, what they're doing is working. Let's just do that. Like, let's just do that. Let's just do that. It would have created this sort of like cognitive bias of difficult environment to actually develop your first principles about who you are and what you believe. And we feel like we have that very strongly now from a cultural perspective, how we operate, what we look for in founders, et cetera, combined with feeling like I very much feel like we're operating like one of the best venture capital firms in the country, if not the world. Um, and that's the reverence and respect I have for the Bay Area ecosystem before we step in. Is like, I want to have a good product and I want to feel confident that we can actually add value to that ecosystem before we just like glom on and say like, well, we're here because this is where venture capital, but we don't have anything to offer to the ecosystem.
What are the strongest signals or most consistent traits that you see from founders that come through Antler that go on to succeed, that are really
Yeah.
thriving?
Yeah, that's a great question. So I think there's obviously a ton of different things, but if I have to really boil it down, which I think is important, I talk about like the two A's. It's an incredible sense of aspiration, like third standard deviation sense of aspiration, and it's a really really high sense of agency. And so the way that I articulate that is like it's an ability to think about the world in a very rare way in terms of like what you could potentially accomplish by building a company and what the world could look like if you succeed. And then it's an incredible high sense of agency to go and actually take action against bringing that vision to life. For me, those are the two things where it's like, if a founder has nothing else, but they have those two things in spades, I think they have a very high chance of being successful. Because like, I think ultimately those are the two most important skill set when it comes to the actual challenge of building a startup. Like the high aspiration is really important because in order to like create a category or change the world in some profound way, you have to be able to envision what it looks like if you don't constrain yourself to what it looks like right now or the status quo. And that's a rare way of thinking about the world. And then the agency piece, I think, is twofold. One, it's the ability to like really consistently and with high urgency take action against your vision. And two, I think the other side of agency is like it's having a really strong sense of resilience against lots and lots of negative feedback. Like that is another aspect of agency that I think is really important is like you are really convicted in what you believe. What you believe comes from first principles. And so you're very resilient against all of the inevitable negative feedback that you're going to receive as a founder throughout all the different stages of building a company. So, in the beginning of starting a company, it's like the negative feedback is sort of apathy or irrelevance. It's like nobody cares what you're doing. As you start growing, it starts to transition into like, okay, what you're doing is objectively working, but now you're accumulating haters and people who don't believe in your mission or people who think you're doing something bad or whatever it is, blah blah. Um, and so for me, it's really those two things. And um, I like I do think there's a balance, like the whole like our founders born or our founders graded. I think it's both, right? I mean, I always think about kids. You have two kids. I have two kids. I was telling somebody the other day, like kids are a constant reminder that nature and nurture are both correct. Like some days you feel the pressure of like, wow, like how I raise my kid is going to be so impactful on who they become as an adult. And other days you're like, they are totally their own person. It doesn't matter what I do. Like they came out of the box with their own personality, and that's like fully self-actualized in a toddler. Um, and I think founders is very similar. Like I do think there's inherent temperaments that put people in a position to be a better founder. But I also believe that I don't think you can learn those things, but I think those things can be unlocked. And so aspiration is a really good one. Like I don't think people are necessary. Like I was talking to somebody about this the other day. I think in any highly, highly aspirational person, they have a moment in their life where like someone else that has really, really high aspirations sort of like opened the curtain and showed them like, hey, like you don't have to think about the world the way that you learned in school. Like this median version of thinking about the world, there's actually a different way to think about the world. And there's this like really profound effect that someone can have on another person if they basically just give them permission to say like, what if you thought 10x crazier than what you're thinking right now? Um, like like go beyond what you think is possible and just use physics as a constraint, which there's basically no constraints to. Um, and so I don't think you can learn these things, but I think you can be I think they can be developed. And I think particularly highly aspirational people can like reveal this way of thinking about the world to other people who have potential to be really highly aspirational and to think about the world on like a meta level instead of just like, the day to day.
For the founders that don't work out and don't work out early, is the signal just an inversion of what you see to the positive side? As in they're kind of thin skinned, maybe lack agency, not super ambitious? Or are there other traits that, or character flaws that pop up that you see and you look back on and it seems evident?
Yeah. I don't think it's necessarily character flaws. Like, I have a tremendous amount of respect for anyone who endeavors to build a startup. Like, it's, I think, one of the secondary to like having and raising kids. I think it's like one of the most challenging and impactful things that you can possibly pursue. I would say that probably the most common trend I see in like founders that we don't end up backing is the timing is not right. Um, in that like they haven't yet found the thing that they want to like dedicate a huge portion of their life to. So if you think about your working life being, roughly 40 years median in terms of life expectancy and like when you're going to have productive working years, if building a startup is going to realistically take like a really profoundly impactful startup is going to take you anywhere from like 10, but I would say realistically, it's going to be 15 years. You're talking about dedicating like 25 to 30% of your like productive working years to pursuing this thing. Like the stakes are very, very high. And I think building startups has become very high social status. And so a lot of people pursue it because it feels like the thing to do and it feels cool and it feels this and that. That's not enough motivation to dedicate that much of your productive working life towards. It has to be like deeper than that. It has to be intrinsic. It has to be, I talk about like a lot of times the best founders, like they have no choice. They're like, I can't, there's nothing else I can do. Like, I can't stop thinking about this one thing. Like, I really do truly want to dedicate a huge chunk of my productive years. And so, what I would say, what I most common run into is founders who haven't yet found that. And so they're sort of like, well, I want to build an AI because it's really hot, or I want to do this, or I want to build this like little widget because me and my friends think it's cool and this and that, blah, blah. But it's like, that's great. And I would never discourage anyone from doing that. But to really want to go out and raise venture capital and like try to build a company that can satisfy the financial, like mathematical requirements of venture capital, the motivation has to be much deeper than that. And for people who haven't found that yet, I have no judgment there, but I would say like keep exposing yourself to a bunch of things, like keep working with other visionary leaders who know the answer to that question. Keep building your Rolodex, keep exposing yourself to things that you haven't tried before until you find that thing. Because the downside risk of starting a company is tremendously high, socially, emotionally, physically, financially, right? Like it's not a low stakes endeavor. And so unless you've arrived at a place where you can really confidently look in the mirror and say, like, I'm willing to spend 15 years of my life, like hell or high water, to make this thing happen, I don't think you should pursue the venture capital route. The good news, though, is like with how cheap everything has become, and now with vibe coding and generative AI, et cetera, you don't have to pursue the venture capital route to build anything that doesn't require a ton of capital, which is amazing, right? Like, I think we're going to have this digital, I don't want to use the term small business because it has so many implications and so much stigma, but there's like this new class of company, which is like, it doesn't need to raise a lot of money. It will create an amazing financial outcome for the founders. They'll have great work-life balance. Like it will scale and they'll be able to manage it with a tremendous amount of autonomy because they don't have a lot of stakeholders. That's great. That doesn't fit well into the mathematical requirements of venture capital, which is not a judgment. It's just an objective fact. And so that's probably the biggest thing that I see is like founders just don't truly know the answer to that question yet. And so it's sort of inviable to begin with. From a venture capital perspective, it's not inviable from a business perspective by no means.
YC surveyed their latest batch of founders and found that 25% of them had 95% of their code base generated by AI. How do you think about vibe coding in the context of Antler and startups at large?
Yeah, I mean, I think it's amazing, right? Like the ability to speed up the iterative process of getting a product out into customers' hands is an incredible tool, right? Like that's been kind of the final missing piece in terms of all of the things that you can iterate very quickly. And building a startup now is like, oh, I have to write code to have a product that's high fidelity that I can put in customers' hands and actually get objective feedback on, do they like it? Do they find it valuable? How do they use it? What can you do, et cetera. So for that, I think it's amazing, and it will speed up that iteration sort of product market fit discovery process for many, many startups. Do I believe that eventually companies are going to have to transition into having like more robust infrastructure and an actual engineering team? Yes. I think we're probably still a long ways from like a true 100 million revenue company being like 100% vibe coded. Maybe one day we'll get there. I don't think what we have right now is that. But the value that I see is just the iterative process of putting product in customers' hands. So one of the big challenges that startups have is the fidelity of feedback you get by putting a product in customers' hands versus like customer self-reporting is orders of magnitude higher quality. Humans are infamously bad at self-reporting, like what they want and what they like. This is studied across many, many different product types from a consumer behavior perspective. Anyone who works in like CPG or the development of food products, et cetera, knows that like if you just ask customers what they want, you'll get drugged down all these like crazy dead end rabbit holes. And so being able to like vibe code something very quickly, put it in customers' hands and get really high fidelity feedback that's not self-reported, but actually like observed in terms of how they're using the product, I think is phenomenally valuable. Because finding that thing that sparks joy in your customers is what every startup is looking for. And so speeding up their ability to do that for more people, I think is a tremendous amount of potential value has been created. And we're already seeing that be realized. So that's kind of my thesis on vibe coding is like, I think it's opened up the world for many, many more companies to find product market fit much faster with much less resources.
Yeah, I agree. And I think something you alluded to there was, and this is a knock I hear sometimes from developers is, well, you can build something light, but that doesn't get you to enterprise scale. I'm like, who cares about enterprise scale at pre-seed and seed? You're just trying to prove that there's a product that people care about or interested in and there's demand for. And if all those things are true, okay, we can figure out the back end and we can scale this. But those are the things you need to prove first, not that you've built something that could be huge on the back end. It's whether it's actually demand, people care about the product.
Yeah, and building it from scale from day one is probably actually the wrong way to do it anyways, because you're going to be quite incorrect about a lot of the things that you like strengthened, and you're going to realize that a lot of the things you didn't think about are actually where it breaks. And so it's like building robustness into your product should be done after it starts breaking and not before, or else you just waste a lot of effort and go back and have to like rip things out and, et cetera. But yeah, like I think vibe coding is being treated as like totally new phenomenon, but the way that I look at it is just the next step in the abstraction of telling a computer what we want to do. Like it's a big leap, but it's still just an incremental leap from, all the way back in the beginning. It was like, okay, if you wanted to tell a computer what to do, you had to like physically manipulate circuits. Like if you go back to the Turing machine, right? And then it's like, and then we had assembly, and then we had all the C family, and then we had terminal, and like all the way up to like right before AI, we just had all of these JavaScript, Python, etc. libraries. Like every single step is just an abstraction to make the learning curve shallower for someone to tell a computer what they want to do. And I think vibe coding is just the next step in that evolution. And as it gets better and better, like it in and of itself will flatten the curve of like, it gets better at understanding what you want. It gets better at actually writing code. It's the same progression we've been going through. And I think at every evolution, you would have people like, oh, and Python or Ruby on Rails first came out. I'm sure you had a bunch of developers who are like, well, if you can't write in the C family, you're not really a developer. And it's like, yeah, okay, like from a prestige perspective, fine. But when it comes to building a company, who cares? It doesn't matter. And so I think a lot of the argument is actually arguing two different points. Is like, are you seeking prestige in the engineer community? If so, then yeah, being able to write incredibly complex algorithms in assembly is highly prestigious. it doesn't necessarily map onto the process of building a successful company.
You're a former operator, investor now, investor and operator. I talk to operators all the time who openly are like, yeah, I'd love to be on the other side of the table someday. I think they assume that we're just spending half our day being fed grapes and the other half skiing. But what advice would you have for a founder or an operator who's thinking about making a career move into venture?
Yeah. Yeah. I mean, the being fed grapes and skiing all the time is certainly not, it doesn't not exist, right? But the post carry GPs out there are very, very, very far into the journey, right? Like that is not the lifestyle that you're going to live for the first, I don't know, 10 to 15 years of, building a firm and getting it off the ground. Um, I think the reality of being like pre-carry is a lot harder than most people think, and it's a lot less glamorous than most people think. And you're really trying to do so much stuff with very little resources. Like the 2 and 20 fund model that an emerging manager is sort of forced to take because of LP expectations. It doesn't go very far. I mean, people will do the math around like the 20% if you have a 5x fund and this and that, but it's like, but also make sure that you put that out in year 12. Like when your fund is fully realized. And so for those 12 years, you're living off of the 2%. And maybe in 12 years on a 4-year deployment fund cycle, by the time you get to 12 years and carry starts flowing back, yes, you stack 3 funds on top of each other. But if you're an emerging manager, you've got $30 million funds. By the time you're fully stacked, the first fund basis for the 2% is probably cut in half because of write-offs and exits and this and that. So let's call it conservatively $50 million that you're charging 2% on, right? That's not, I mean, that's barely enough money to like pay yourself a decent wage and pay your lawyers and pay your fund admin and like hire an analyst and do this and that. And so I think if people actually sat down and went through the math of like getting a fund business off the ground before carry starts flowing in, they would realize that like it's not a very attractive business. It's certainly not a good way to make a lot of money fast. Like you are living on venture timelines by default, and you're a secondary player in venture timelines. Like the thing that you don't control as well is like you can tell your companies you should grow faster, you should be more aspirational, you should try harder and this and that, but like you're not steering the ship. So you're at the will and the speed of the companies that you chose to invest. And I think that's really hard for people who come from operator backgrounds, is how passive venture investing can be. Is like, I want, like, you look at a portfolio company, like, if I was in charge of this company, it would be going so much faster and this and that. There is some delusion there, but like you live with that every day. And so I think it's just a fundamental mismatch of like the people who have big platforms disproportionately represent post carry GPs, right? But the actual reality and the math of getting a fund to post carry is pretty bad.
Well, it gets back to something you said earlier about founders. I think a lot of emerging managers, they start the firm because they just feel like they have to do it. They have this burning desire to do it. You're not doing it to maximize your personal NPV. Like realistically, most of the time, it's not the rational move. It's just something you're super passionate about.
There are intellectual aspects to being a VC that I think are very, very appealing to the right type of person. You get to see lots of different stuff being built. You get to build this like really broad scope, like pattern recognition about what's going on in different industries. Like that part of it is the upside. And you get to work with founders and help them realize their vision of what they want to build, which is incredibly rewarding. But it doesn't necessarily scratch the itch of like sitting at the helm of a company and having full control over like, where do we put our resources to drive growth and make this company better? What's the next product we launch? How do we double down on, the risk that we're taking, all those things? Like venture isn't going to satisfy that itch very well.
What's a question you love to ask founders?
I have two go-tos. One is like, do you have any strange hobbies that you like would feel embarrassed to share with people? I like that question, one, because you find out a lot about people. It kind of takes people aback. And For me, I think that strange hobbies tend to indicate high agency, because it means that people have the ability to pursue things that they're intrinsically interested in, even if they're not like socially cool, right? Which is a really strong indicator of high agency. Um, and it's also a really good way to get to know somebody because you get them to talk about something that they're inherently very passionate about and like care about a lot. And so you can like get someone really going on a roll and see the type of enthusiasm, and the type of effort and the type of urgency that they bring to something that they really enjoy, which I think is great. It like gives you a lot of things that are very useful in underwriting like someone's ability to be a founder. Is like if you find something you're really interested in, like how do you approach it? Do you approach it passively or casually, or do you approach it like a maniac? Um, and the way people approach their hobbies, I think, is a really good indicator of like how they'll approach building a company. Um, and yeah, I mean, I would say the second piece is I really just want like, I mean, this sounds very basic, but I'll just dive in with like, tell me what you're working on or tell me what you're building. Like, tell me what problem you want to solve. And I'll just like dig and dig and dig and dig and dig until we get to like the bottom of the depth of their thinking. Um, and what I'm looking for there is really deep first principle thinking. And so like I really enjoy having conversations with like incredibly strong first principle thinkers because like I learn a lot from those conversations. Like in my opinion, a really good founder is this like wealth of um, uncommon information about a particular topic because they're just like really fully in it and they're like looking at it from a perspective that like 99.9% of people wouldn't look out of it. And it tends to be like very interesting to hear somebody talk about like, yeah, did you know this? And that means this and therefore this, blah, blah. Um, and I think it also gives you a sense of like, you also meet founders who just can't go deep, right? And so like they're just repeating things that they've seen or heard from other sources, but they don't have any like truly self-formed thoughts about the particular subject, which for me is sort of like an anti-sign. It's often an indicator that you're pursuing it for the wrong reasons. It's also an indicator that you're going to really struggle to compete with the people who are much, much deeper and much more obsessed with the space that you're building in. They're just going to see things that you don't see. And then I tend to find it either like ends a conversation quite quickly or it turns into like a really, really fascinating conversation where I can like sit there and be a nerd with the founders for like 2 hours and just keep asking clarifying questions. And then I walk away with a lot of value because it's like I learned a lot from that conversation.
What's a conventional view in venture that you think is BS?
Um, I think one conventional view in venture is ideas don't matter. I think that's repeated a lot. It's become like a cornerstone of kind of the zeitgeist of modern venture of like the idea doesn't matter. Um, I think originally that thinking was the idea doesn't matter in a sense of like you don't need to have people sign NDAs to talk about what you're building, right? But what it's morphed into is like the idea doesn't matter. Like work on anything. Anything has as good of a chance of succeeding as not. And I actually think that that's BS. I think that there is a very noticeable difference between like good ideas and bad ideas. And I think that whether an idea is good or not is informed by one, how well does this idea fit with the founder and the team that's building it? Like, how likely are they to be one of the best teams in terms of how they think about this particular opportunity in the market? Um, and then two is like, how good is the idea in respect to the market and the timing of the market and the demand and how demand for this particular solution is going to evolve and how emerging technologies are going to support a value proposition that's better than what's out there before. And so I actually think we encourage a lot of founders to like just find a way to make $1 on the internet and then like go raise a bunch of money and go run and learn and this and that. And one of the reasons I like working with founders at the early stage is I actually think there's a tremendous amount of value to like be patient in the idea formation phase, right? And like don't emotionally invest into like the first idea that pops into your head until you've like really taken it through a rigorous process of like, is this a good idea? Like, should we actually put resources towards this? So that's something I believe in very deeply. And I think um, we send a lot of founders down kind of dead end rabbit holes because like the easy advice for founders is let's just find a way to make money from customers and then that's your idea and there's nothing more to it. And I think the opposite is true.
Tyler, it's a really fun conversation. If there's a founder out there who listened and they want to be part of what Antler's doing, building, what's the best way for them to get in the conversation?
Yeah, so the best way is if you go to antler.co/USA, it'll take you straight to the US page. There you can join an AMA, so you can come and meet our team on a weekly basis. You can subscribe to our newsletter and be kept up to date with what we're doing and events we're having and how to come and meet us. You can also apply directly to come in and work with us. And so that application is essentially, hey, I want to build a company. I want to come and do it with Antler. I want the community. I want the funding. I want, access to the sort of partnership model of working with me and my other partners in terms of thinking through your idea. We look at those applications every day. Or people can follow me on LinkedIn or Twitter. And I always respond to DMs. Maybe not in 24 hours, but I try to get through all the DMs that I have. So if founders are interested in learning more about Antler, I would say check out the website. You can check out my socials if you want to kind of follow directly my communications of what we're doing. And if you're interested in building a company, I would definitely suggest applying or reaching out to me.
Awesome. Well, thanks again for coming on the show.
Of course, Joe, I really appreciate it. And I look forward to doing this again.
Hi, Joe again. Thanks for watching the show. If you'd like more of this in the future, subscribe to our channel. If you'd like to learn more about Seaplane Ventures, just check out seaplaneventures.com. Cheers.